We didn't change the ID. Everything's fine. Okay, good morning. Can you? Okay, we have a question going in Learning Catalytics. It'll be open for a little bit, but that is the session. If when you signed in it said 7:45, that was just the line. It had nothing to do with what time it actually was. Okay. So there'll be a question. We'll get back to that. So basically what we're going to do today is I've got some administrative announcements. Then we're going to do Chapter 3. And then at the end of class, we're going to talk about our exam. And I would ask that you hold exam questions until the end of class, because Haley's not going to answer it right now. We're going to talk about them. Okay, so some things, administrative details to talk about. First of all, this week is a little bit different because we have an exam coming up about what's due. All sections have homework on Chapter 3. Chapter 3 homework, this is one of those fundamental chapters. The first 3, chapters 1, 2, and 3, fundamental chapters. This homework is going to take a fair amount of time, so enough time for it. There is also an exam info quiz, and that's in my accounting lab. And that will become available at 1 a.m. tomorrow. I wanted to make sure we got through the material in class before it came up. It's in my accounting lab. You have a maximum of 2 attempts. This should be an easy 100%. It will be over the exam information that we talk about in class today, and also what's on Blackboard. You can answer it using what's on Blackboard. That's fine, and what we do today. I believe it's 8 multiple choice questions. You get 2 attempts. Your average is your score if you take both attempts. And that's due Saturday. So Saturday, everyone, regardless of section, has homework on Chapter 3 due and this exam info quiz that is going to become available tomorrow. Also, there's something else that's going to show up as available tomorrow, and I want to make sure you understand what it is. I have a Practice Exam 1 quiz, and that's going to pop up tomorrow. That is due before you take your exam. So you have to take it before the exam. This is, and we'll talk more about this on Wednesday, but it counts as a quiz. It's a practice exam. And again, your score on it is your average of all your attempts. I would advise you not to go into the practice exam quiz till we talk about on Wednesday, but it's there. So the practice exam quiz, we'll talk more about that one on Wednesday. That's due before you take the exam. So it will be up there available, but that's not the one that's due this week. This week you have homework on Chapter 3, Exam 1 info quiz, and then if you're in Section 3, which isn't most of you in this room, but Section 3 has a regular quiz due as well. Okay. Next week is our exam. Okay. Remember that this Friday we have an optional session. This chapter, I felt like a broken record. These first 3 chapters are so fundamental, but this Friday we're going to be going over more things, more practice, more homework problems that we don't have class time for. So do know that you can come or you can watch it later. It's recorded, and that will be available. Exam 1 is next week. It runs Monday, Tuesday, and Wednesday. Exam info is on Blackboard. And at the end of class today, we're going to talk some about Exam 1. We do not have class next week. Your job next week is to take this exam. So no class next week. So we have class this week, no class next week, and then we'll be starting with the new material the week after that. Okay, and one more administrative detail before we get started. If you're an accounting major, or think you might want to be one, we have a huge event this Thursday night. It's from 5:30 to 8. You do not need to go to the whole thing. A half hour would be adequate any time in that time frame. And what we have is we have about 40 firms or so that come in and they set up tables or booths, and you can walk around and talk to the firms. This event is where our juniors are going as the first step in obtaining the internship. We also have seniors attending to get look for jobs. It's a wonderful opportunity to see what's going on. If you were in Dr. Zuka's FYE last year or my FYE, would have gone to this. But everyone else, if you're an accounting major, this is a wonderful event. If you're interested in going, you need to get additional information. You can email me and I will refer you to Professor Rose at jmrose4@kent.edu. So again, if you don't write that down, but you know that you have Thursday evening free, you're an accounting major, this is a wonderful event. I cannot emphasize it enough. If I did only one thing this year, if I were an accounting major, to further my job prospects, it would be to go to this event. And again, you don't have to go from 5:30 to 8. You could go from 6 to 6:30 or something. It's just walk around and talk to firms. And if you're shy, Haley will be there, I will be there, we can introduce you to people. So it's a wonderful event for accounting majors. So email me if you're interested, and we need to hear from you in the next 2 days if you want to go. Okay, Chapter 3. Okay, Chapter 3. Chapter 3 is huge. Chapter 3 is the one that's going to feel really foreign, really different from what we've done before. Last week I got some feedback from people saying this wasn't really so bad. I did okay. Fine, we'll try this week. This week is going to feel different. It is a different language, and I know that. We're going to do lots of practice today. We'll do practice on Wednesday. And then Friday, this optional session, is another opportunity for more trying out these concepts. So we're going to talk about accrual income. There's two bases of accounting. There is cash basis accounting, so simple cash. Cash basis accounting is only used by the smallest businesses, the absolute smallest businesses, and by individuals. Cash basis accounting says we don't do anything until cash changes hands. You as taxpayers, all of us as U.S. taxpayers, we're on a cash basis as an individual. As an individual, what goes on my W-2 are my wages that I actually received. Say my W-2 for 2014 will be those wages I received in 2014. So if I got a paycheck in 2014, it's on my W-2, and that's what goes on my tax return. I am a cash basis taxpayer, as are all of you. Now the first paycheck I got in January, I got a paycheck January 2nd. Now that paycheck was for work I performed in December of 2013. Since I'm a cash basis taxpayer, my income is in 2014 based on when I got the money. Okay? So that's cash basis, and that's what we're used to. We recognize the revenue when we get it. But I actually earned those wages back in 2013. Maybe I should recognize the wages in 2013. And that's what we're going to be talking about today, is when we actually earn stuff and when we actually incur stuff. And it's not necessarily when cash changes hands. Now, cash basis accounting is for taxpayers and very, very small businesses. For all other businesses, businesses of any size, have to use something called accrual accounting. Accrual accounting means that we recognize revenues and expenses when we incur them, not when we pay cash. Now there's a lot of words on these slides. These slides are available on Blackboard. You can download them for the official words. Accrual accounting is generally accepted accounting principles, U.S. GAAP. That requires accrual accounting for businesses, other than the very, very smallest. So in this semester, after this week, and even this week, when we talk about accounting, we're talking about accrual accounting. We will only talk about cash basis when it specifically says cash basis. So in this chapter, we're going to introduce this idea of accrual accounting and versus cash basis. And I'm going to go through an example to show you what I mean in just a minute. But before I get there, with accounting, we report information at regular intervals. Usually, typically, we think of a year. So every year we do income statements. We can do our balance sheets. We do our financial statements at least once a year. We do them interim. We can do monthlies and quarterlies and things like that. 60% of large corporations have a year-end that's a calendar year-end, December 31st, and that's fine. But the other 40% can choose whatever year-end they want. Here at the university, for example, we have a year-end of June 30th. We have a year-end of June 30th because our operating cycle kind of ends at June 30th. If we had a year-end December 31st, that would cut our financial statements right in the middle of an academic year, which doesn't make a lot of sense. So most universities and colleges have fiscal years that end sometime in the summer between academic years. Similarly, a lot of retailers don't end their year end at December 31st because of holiday returns. They get a phenomenal amount of returns in January. So many, many retailers have a year end, have a year that goes from February 1st to January 31st. And that's because that better reflects their operating. And that's so they can try to match the revenue, the sales revenue of when they sold the stuff with the returns coming back in. So if they cut it off January, they'll have the returns that belong to those sales. So what we're going to do now is we're going to go through an example. And this example is just to highlight, it's ridiculously simple, but I think it highlights the deficiencies of cash basis accounting. Okay, so we have a mower guy. So we have someone that just has his own business. It's a mower guy. And mower guy mows lawns. So in May, this is the scenario. In May, a customer pays him $600 to mow their lawn for June, July, and August. So this is back in May. So in May, mower guy gets $600 cash to mow lawns in June, July, and August. And then in June, mower guy pays $50 to rent his mower. In July, he does the same thing. In August, he does the same thing. So those are the facts of the situation. That's when cash has changed hands. So mower guy gets $600 in May and then mows in June, July, and August and rents the mower in June, July, and August. So those are a set of facts. So on a cash basis, mower guy would have $600 of revenue in May because he collected $600. And then in June, he would have $50 of expense. In July, $50 expense. August, $50 expense. So what you're going to see, if mower guy would go to the bank for a loan and take financial statements for this example, mower guy would have $600 of net income in May and would have a $50 loss in June, July, and August. So then anyone looking at these financial statements would say, wow, you really had a bad summer, but you had a great May. Why don't you just do more of May? And that doesn't make any sense because we can look at this because it is one transaction and we can say, well, that's not the case at all. In May, he didn't do anything. He just got cash. In May, he actually has a liability, an obligation to mow those lawns. If he doesn't mow those lawns, he has to give the money back. So he didn't do anything to earn that money in May. He actually earned it in June, July, and August, but it's showing that he lost money those 3 months. So this is the deficiency with cash basis accounting because it doesn't show important things. It doesn't show in May that he has a liability to perform those services. It doesn't show that in June, July, and August he actually earned money, not cash, but he earned that revenue because he was actually out doing the work. So cash basis does not provide good information. So what we use instead is accrual accounting. Now accrual accounting, taking the same set of facts that we have, what we'll do is we'll say, okay, same cash changed hands, but now we're going to take that $600 revenue, and instead of recognizing revenue in May, we're going to recognize it in June, July, and August. And he's mowing in all 3 months, so we'll just take the $600 revenue and divide it up and split it to all 3 months. So we'll put $200 in June, $200 in July, and $200 in August. So now what we have is in June, he earns $150 net income. And that makes sense because he mowed and he paid for the mower, so he has $150 of net income. Then in July, he also has $150 in net income. And in August, $150. So what we see from an accrual accounting standpoint, in May, he has 0 income because he didn't do anything to earn it. He simply collected the revenue in advance. So he actually has this liability in May. So in May, he's getting cash and he's incurred a liability. So then in each of those months, June, July, and August, he works off some of that liability and recognizes revenue. So in this case, this reflects what happened. He didn't do anything in May, so he has 0 net income, but he mowed in June, July, and August, and he's showing net income for each of those 3 months. So accrual basis accounting says let's recognize revenue when we earn it, and let's recognize expenses similar when we incur them, not necessarily when cash changes hands. Yes, under accrual basis accounting, we recognize cash transactions. We just don't recognize them as revenue. So back here in accrual accounting, when May, we don't say that $600 of revenue. We actually recognize that we have cash coming in, and then we have a liability to perform those services. So then each of those 3 other months, we recognize that revenue. So what we're going to do in this chapter is we're going to talk about accrual accounting and look at the differences between the two. So what we're going to do a bunch of homework exercises today. We're going to start with short exercise 3.1, but before we do that, let's go ahead and go to the first question on Learning Catalytics. It's still open. Okay, so this one, we talked about this one. This one's a little challenging. We talked about this on chapters 1 and 2. We talked about prepaid something. We did prepaid insurance, but prepaid rent is similar. What kind of account is prepaid rent? And again, today is participation based. You need to enter an answer, and we're not grading for accuracy yet today. So just make sure you answer. Okay, and we're going to, the session ID is in the chat window if you're online. Everyone get in. We have 338 responses right now. We're waiting for about another 20. And again, choose an answer. Five seconds. Okay, the answer is asset. Prepaid rent. This is when we pay our rent in advance. A lot of times as a corporation, our landlords will offer a certain discount if we pay 3 months at a time or a year at a time, so we'll pay in advance. If we're paying for the upcoming year, that's not an expense until time goes by, so we put it in an asset called prepaid rent, and it's a future economic benefit because it provides us the right to use that place for rent. Okay, now we're going to do one more. Okay. Okay, now on this one, you have to enter a word. So blank basis accounting records the impact of a business transaction as it occurs, and I'll tack on a little explanation, regardless of when cash changes hands. So blank basis accounting records the impact of a business transaction as it occurs, regardless of when cash changes hands. Right now, 38% of you are correct. So, or have spelled the word wrong. So, again, we're looking for what basis of accounting records the impact of a business transaction as it occurs. So as we earn service revenue or as we incur an expense. Notice this does not say anything about cash changing hands. Okay. Enter a word. We've got about another 5 to 10 seconds to get a word entered. We're up to 46% correct or misspelled. Again, type your word in and hit submit. Make sure, because right now I'm missing about 40 students. Could be just refreshing. So we'll give it another 5 seconds and then we're going to close it. So get a word in there. Blank basis accounting records the impact of a business transaction as it occurs. Okay, the answer is accrual basis, A-C-C-R-U-A-L. So accrual basis accounting records the impact of business transactions as it occurs. Cash basis accounting only records a transaction if there's cash involved, period. It does not record a transaction. We could have lots of transactions that aren't recorded under cash basis but are obviously transactions. For example, if I'm conducting a business and I sell $10,000 worth of park benches to a customer, the customer takes the benches and says, I'll pay you in 30 days. Under cash basis accounting, that is not recorded. Okay, the customer owing me that $10,000 is not recorded. If I go buy a new piece of equipment for $100,000 and the vendor says, we'll bill you and you can pay us in 30 days, I don't record that under cash basis accounting until I pay the bill. Accrual basis accounting focuses on when transactions actually occur regardless of cash. So accrual basis is what we're going to be studying the rest of the semester unless we say otherwise. So we're going to go back into that exercise, short exercise 1. These short exercises that we're doing right now are really small. They go pretty quickly. Here we're given a lot of information and we're asked, for example, how much was part A, how much was Southeast net income, and part B was how much was their cash balance. This is an exercise in deciphering how it's worded. You may think that these are very picky things, but life is picky. You're going to be out operating in business and it makes a huge difference. Wording is huge. So it's not me being picky or the book being picky. This is real life and these are legal things in many cases. So in here, it tells us that we have Southeast Corporation made sales of $825 million during 2014. Of this amount, they collected cash for all but $27 million. Gives us cost of goods sold. By the way, cost of goods sold is an expense. Okay, even though it doesn't say expense, cost of goods sold is an expense. And then all other expenses for the year were $325 million. And then during 2014, Southeast paid for its inventory and paid for other things. Okay, and it tells us beginning cash. So the first thing is it's asking us what was net income. When you see net income, that's accrual basis. Okay, that's saying on an accrual basis, what was our net income? Net income is revenues minus expenses. And so we're going to decipher what we have here. So revenues minus expenses. So the revenue is sales revenue. So when I'm answering this question, it said we made sales of $825 million. Okay, so we have sales of $825 million. That's my revenues. Now I want to subtract my expenses. Now my expenses are, of this amount they collected cash flow. I don't care about cash. When I'm dealing net income, cash doesn't have a direct connection there. The company's cost of goods sold was $255 million. Great. Okay, so that's an expense. So I'm going to subtract out $255 million, and all other expenses totaled $325 million. So I'm going to subtract the $255 million, okay, and then I'm going to subtract the $325 million, okay, and I get net income of $245 million. Note that I do not include the 6 zeros because it's just given. So it's telling me what my expenses were, and it's telling me what my revenues were. That's fine. It might tell incurred, what expenses I incurred. Now, the second question says, how much was their cash balance at the end? So the second question is saying, let's focus on cash. The sales revenue, cost of goods sold, and all the other expenses are not necessarily cash. They are the revenues and expenses based on transactions, not necessarily when cash traded hands. So now to answer part B, how much was their cash balance at the end of the year? It's just like your own cash balance. If I'm at the end of the year and I want to know how much cash I have, I start with what I started the year with, add what cash I had coming in, subtract what I paid out, and that gives me what I have at the end. So what we're going to see for this second one was, what was their cash balance at the end of the year? We'll start with our beginning cash, add what we collected, subtract the payments, get ending cash. So that's a formula. It's not, it makes sense. You may want to make note of that for later use, that if you're trying to come up with an ending cash balance, you start with beginning, add what you got in, and subtract out what you paid out. So now when I go through this and decipher, my beginning cash is given to us as $75 million. That's just given. So beginning cash, $75 million. Now I want to add my collections. Now my collected, when I made sales of $825 million, that's not what I collected. That's simply saying, here were my sales that I made. The next sentence, of this amount, of the $825 million, Southeast collected cash for all but $27 million. So they're going to make us work for it. So we're going to take the $825, subtract the $27, and that means that we had cash collections of $798. So we just had to do a little math to get to there. Okay, then payments. Payments for inventory were $350. Everything else was $255. Okay. Now notice they said paid. Paid implies cash. So when we say they paid $350 million and $255 for everything else, that's implying that that's the cash. It's a very subtle distinction. The sentence before this told us that our cost of goods sold was $255 and all other expenses totaled $325. In that sentence, there was no implication of cash. In this sentence, when it said they paid, that is the cash portion. So this is very subtle, and we'll do a lot of practice to try to decipher what's going on. So then what we end up with is our ending cash of $263. Now we have one more quick homework exercise. This is another one that goes really quickly, and it's in the same vein about identifying accrual basis versus cash basis. So this is short exercise 3-2. We're given some information where they began the year owing notes payable of $4.7 million, and during the year they borrowed another $1.7 million and paid off $1.6 million. Then it tells us interest expense for the year and then interest payable accrued. So this is an exercise in interpreting what we're told. Okay, first requirement says, show what the company should report for facts on the following statements. So our income statement and then our balance sheet. So for income statement, we're looking for interest expense, it tells us. So looking through there, it tells us interest expense for the year was $0.6 million. Okay, it just tells us, so we're matching up with what it told us. So there we go. The answer for that one is simply going through saying interest expense was. There's our expense. Okay, now next one down, balance sheet as of December 31st, notes payable. Now notes payable, it tells us we began the year with $4.7 million. So that was our beginning. Now we're looking for the ending, so we have to add in the additional notes payable. We borrowed $1.7 million more. So we started with 4.7, added 1.7 more, and we paid off 1.6. So what we're going to see here is we're going to take the 4.7, add the new borrowing of 1.7, subtract the 1.6, and we get 4.8 million as our ending balance of notes payable. Notes payable is only the principal. And then that last requirement says interest payable Okay, so then the last one, interest payable, is interest payable tells us 0.2 million of interest payable accrued, so that's just simply going to be 0.2 million. They're giving us, so we're just having to decipher what we're given. Okay, we're going to do 2 Learning Catalytics questions real quick, and then we'll go back to some more examples. Okay, how far are we on this one? Let's see. Okay, the revenue principle requires that a business record revenue when the business, what's the other one? No, we're going to do this one. Okay, so this is just kind of a precursor for what we're doing. Right now, get your answer in. We have about 5, we're only doing this one, and then we're going to go back in. Okay, so take a stab at it. The revenue principle requires that a business record revenue when the business what? receives an order, prepares the invoice, delivers goods or services to a customer, or receives payment from a customer. So this is under a revenue principle relates to accrual accounting. So 5 seconds, and we're closing. What? I know Haley just shut it. Yeah. Yeah, I had said 5 seconds before that, and then so she did it. So yeah, you see me right after class. Okay. Okay. So this answer is C. It's delivers goods or services to a customer with a revenue principle. We only record revenue when we deliver goods or services. So switch back. I'm going to switch back. Okay, I want to go back to 3-1. Someone in the chat window pointed out there was a math error on this slide. It is the ending cash on short exercise 3-1 is 268. Haley tells me, and not 263. So, but rest assured, when you do it in my accounting lab, you'll have different numbers. So just wanted to make that clear that there was a math error in that one. Did I just go too far? Here. That one. About skipped one whole learning objective. Okay, so now we're going to talk more about that idea of revenue principle and expense recognition principles. So we just said that basically our revenue principle says, let's recognize revenue when we deliver the goods or service. And we can talk about how much to record and when to record it, and that's what we'll be doing. We have some practice situations coming up here. There's 2 situations in your book, Exhibit 3-1. So situation 1 is a customer saying, I plan to start drinking Starbucks drinks. The Joe Starbucks says, great, we'll welcome you as a customer. There is nothing to record there because nothing has been earned. We haven't delivered any goods or services. So nothing's recorded in that incident. Now in the second part, in this case, a customer goes up and says, I'd like a latte. Joe Starbucks says, here's your latte, and they exchange money. Revenue is recognized there because we have delivered the goods or service to the customer. Now it can get more complicated because we're not all standing at a cash register handing over cash, but there's situations where we're IOU. When we recognize revenue is separate from, it doesn't hinge on when we get the cash. So if we're a doctor's office and we're performing services and our patient, we're going to bill the insurance company, we're going to recognize revenue when we perform the services, not when we get the cash. Sure, we're going to record the cash when it comes, but we're going to recognize the revenue when we perform them, and we'll have a receivable. And then when we get the cash later, we'll reduce the receivable. Okay, the expense recognition principle says we need to record expenses when we incur them, not necessarily when we pay them. An example of this is my electric bill. In August, I use, say, $200 of electricity. So that's for August. On August 31st, I know I've used $200 of electricity. My bill is not due for 2 more weeks though. So I would still recognize the electricity expense in August even though I'm not paying the cash until September. Okay, so more of this practice. Short exercise 3-9. Again, this is practicing what goes on which statement. So in exercise 3-9, a very short exercise, we're given information about paying salary expense during the year and then accruing salary expense. Accruing salary expense, when we see the words accrue salary expense, it means that we have some salaries that our employees work during the period, but we're not actually paying them till the next period. For example, when I got paid January 2nd in 2014, it was for work I had performed in 2013. So businesses will recognize the 2013 wages in 2013, not when they record them. So we'll see. We'll do this one. So we had paid salary expense, we accrued salary expense, and then paid the employees. So it's asking for what would we report on the 2014 income statement and then on the balance sheet. So for the income statement, we are going to report the salary expense of $44.1 million and the accrued salary expense. So all the salary for 2014, so our expense for 2014 on the income statement will be 44.1 plus 2.2 to give us 46.3 million. That's the first requirement. On the second requirement, it asks what goes on our balance sheet. On your balance sheet, you should put the payable here. So that would be on the balance sheet at the end of the year, that's the accrued salary expense, so that's going to be salary payable for $2.2 million. Let's start with that one. We did it already? Okay. No, then we'll start here. Go ahead and push out the first one. Go ahead and push out the first one, but we'll leave this one here. Okay, so that does short exercise 3-9. What we're going to do right now is this whole idea of revenue recognition and expense recognition. We're going to practice it. The rule to keep in mind on revenue is we recognize it when we deliver the goods or services. Cash is not necessarily part of that. And then expense we recognize when we incur it, and again, it doesn't hinge on when payment's made. So we're going to start with the first one. We're going to do a series of 4 of them. Okay, so the first one you should have, a customer pays Starbucks $250 on March 15th for coffee to be served at a party in April. Has Starbucks earned revenue on March 15th? There's a YouTube channel in Blackboard. Let me fix this while you're typing. Okay, a customer pays Starbucks $250 on March 15th for coffee to be served in April. Has Starbucks earned revenue on March 15th? I'm going to close this in 5 seconds. Again, get your answer in. It is participation based. correct answer is that they do not recognize revenue on March 15th because on March 15th all Starbucks has done is collected cash. Starbucks still has to earn that revenue. If they don't deliver the coffee in April, they're going to have to pay the money back. So this revenue is not recognized by Starbucks until the party in April when they've delivered the coffee. Okay, let's do another one, similar. Starbucks pays $6,000 on July 1st for store rent for the next 3 months. Has Starbucks incurred an expense on July 1st? So they're paying store rent for the whole month of July, August, and September. Do they have an expense on July 1st? Okay, you have 5 seconds to get your answer in. I would tell you right now, only 35% of you are correct. Unfortunately, it's participation. Okay, let's talk about this. July 1st, Starbucks pays the $6,000 of rent. So on July 1st, Starbucks hasn't used any of that rent. That is actually an asset. That's prepaid rent, and it's going to sit there, and as time goes by, Starbucks will use it. So July 31st, sure, Starbucks has used a third of that. But July 1st, there is no expense. That is an asset. So how Starbucks is going to record that on July 1st is they're going to increase an asset called prepaid rent, and they're going to decrease cash to represent the cash that went out. There is no expense on July 1st in this situation. Okay, let's try another one. Okay, an expense incurred in 2011 is not paid until 2012. Using the accrual basis of accounting, when should that expense appear on the income statement? So think of this as your electric. You used electric during 2011, but you don't pay the electric bill till 2012. When does that electric expense show up on the income statement? Is it 2011 or 2012? Okay, get your answer in. We're going to close the question in 5 seconds. This expense shows up on the 2011 income statement. We recognize the expense in the year in which we incur it, not when we pay it. So we're going to be looking at what we're coming up on now is something called adjusting entries. And how do we do this if we don't pay it till 2012? We still recognize it in 2011 through an adjusting entry process. But before we get there, we're going to do one more question. Okay, on December 15, 2012, a company receives an order from a customer for services to be performed on December 28th. Due to a backlog of orders, the company does not perform the services until January 3rd. The customer pays for the services on January 6th. On what day is the revenue recognized by the company? Happened. I mean, that's just follow up. I don't. Okay, what are we at here? Okay, get your answer in. Make your choice. Vote. We're going to close it in 5 seconds. Yes. Okay. The revenue will be recorded on January 3rd, the date the company performs the services. Now, we're recording cash and all those things, and we'll go through that. What we're doing here is a process to make this happen, to make, like when we pay rent in advance, that process is called adjusting entries. Okay, adjusting entries. These are entries we make at the end of the period to make sure that we've recognized all our revenue and all our expenses. And we're going to go through one example right now, and then we'll do a whole bunch more on Wednesday. Now, these adjusting entries are journal entries made the last day of the period, usually. We include at least one income statement and one balance sheet account per entry, and we'll see that. There are 3 categories of adjusting entries, and we're going to cover all 3 categories on Wednesday. Deferral is adjustment for payment of an item or receipt of cash in advance. So these are like prepaid expenses and unearned revenue. I would know the definitions of all 3 types, and on Wednesday we'll go through more. You may want to get the PowerPoints because your definitions are in the PowerPoints, and they're also in the textbook. So deferrals, we have depreciation, which is allocating the cost. Let's say we buy a piece of equipment that lasts us 10 years. We'll essentially divide the purchase price by 10 years and spread it over the life of the asset. And then we have accruals where we haven't paid for it yet. This is like a utility bill where we know we've used the electric, so we need to recognize the expense even though we haven't paid for it yet. So we have deferrals, depreciation, and accruals. What we're going to do right now is we're going to do one example of an adjusting entry. And it's a prepaid expense, so it's a deferral. And we talked about prepaid rent, and this is an example. As soon as we finish this example, we're going to switch to talking about the exam. Suppose Freddie's Auto Service prepays 3-month store rent on June 1st. So June 1st, Freddie pays $3,000 of rent for June, July, and August. The entry for the 3 months of rent is going to debit prepaid rent, credit cash. So we haven't done an adjusting entry or anything. This is just what happens when we pay the rent. We have an asset for the 3 months of rent. That's a future economic benefit to us. And we've spent cash for it. And then we'll post those to T accounts. We would have T accounts, remember our debits go on the left and credits go on the right. So we have prepaid rent and asset has a debit balance of $3,000. Cash gets credited for the $3,000. So that's all that's happening. That's not an adjusting entry. That is simply what happened June 1st. But what we're going to do now is we're going to fast forward to June 30th. And we're going to say, okay, June 30th, what needs to happen? Well, on June 30th, we've used up a month of that rent. So that was 3 months rent. On June 30th, we've used 1 month of rent. That rent is $1,000 a month, so we've used $1,000. So what we're going to do on June 30th is an adjusting entry to recognize that we have rent expense for 1 month for June, and we've also reduced that asset. That asset is now not 3 months of rent, it's only 2 months left. So what we're going to see on June 30th, an adjusting entry to transfer $1,000 out of that asset into rent expense. So the adjusting entry is going to debit rent expense and credit prepaid rent. So what you see there is we're debiting rent expense, we're recognizing the expense, and we're crediting prepaid rent. This is the adjusting entry if we ever have prepaid rent. It's always going to look like this. We're always going to debit rent expense, always going to credit prepaid rent. So we'll see that we are crediting prepaid rent, debiting rent expense. So our prepaid rent account at the end of June now has a balance of $2,000, which is what we want. There's 2 months of rent left. And that was an example of one adjusting entry. We're going to do a series of adjusting entries. I would urge you to get the PowerPoints because you're not going to be able to keep up with all this if you're writing from scratch. Or if you want to use them later to fill in your notes, that's fine too. But Wednesday we're going to have a ton of things like this. And what I'm going to be doing now is I'm going to switch over to talking about the exam. I'll be talking about the exam too on Wednesday. I'll be answering questions on Wednesday. So right now, and this includes you online, let me do my spiel because I think I'm probably going to answer both questions as we go. And I'm going to switch over to exam. All of the information here is on Blackboard under exam info. And your exam info on Blackboard is tailored to the section you're in. I'm going to do a certain amount of generic talking right now. And there's also an exam info quiz appearing in my accounting lab starting tomorrow, that's due Saturday, over this information and the exam information in Blackboard. Everything I talk about with the exception of one thing is in Blackboard. And I'll tell you what that one thing is when we get to it. Our exam is next week, Monday through Wednesday. We do not have class next week. Your whole job next week is to take this exam. This week is going to be a lot of work for you. You have homework and you have to prepare for the exam, and I acknowledge that. It's not an even spread. Okay, I don't want to make an exam due next Friday because of long lines. Okay, so we have class Monday, Wednesday, so we're going to take our exam in that Monday, Wednesday time period. So you're going to have a pretty hefty workload this week, this weekend, but we do not have class next week. Okay, and then we'll pick up the following week with the new material. The exam is over chapters 1, 2, and 3. All the stuff we've done. All those chapters, everything in the chapters is on the exam. We have 3 chapters on this exam. Just a disclaimer, all the times I talk about are in Eastern Standard Time. So I'm not going to keep inserting that every time I say a time. It's all Eastern Standard Time zone. Okay, if you are in sections 1 and 2, so if you're in another section, don't pay attention to this. This is sections 1 and 2 only. Make sure you know your section. Every semester I have people that don't know what section they're in. So make sure you know your section. It makes a difference. There are 2 slides that differ depending on what section. This is one of them. If you're in sections 1 and 2, you'll take the exam in the computer lab on the 2nd floor of the College of Business between 9 a.m. and 9 p.m. roughly. The room number is something like 224. If you're in a face-to-face section, I assume you've been in the room 200. It's the very opposite end of the hall. It's computer lab there. You have to be seated starting your exam by 7 p.m. to be allowed to take the exam, which means do not show up at 6:30 because there could be lines. Lines can be long. I do not expect this to happen. But last semester, last spring, the exam before spring break, the lines were 2 or 3 hours long, and some students were closed out because it was a perfect storm of how many exams were going on and people wanting to leave for spring break early and all those things. There are no appointments in the computer lab, and if you're in the computer lab, scratch paper, blank scratch paper will be provided for you, as will a calculator. Okay, so that is sections 1 and 2. Also, I will tell you that normally we have 2 labs. One lab right now is closed down because of the construction for TechSpot. So we are down to 1 lab, 24 computers in that, 36 computers in that lab. And I've got 380 people in the sections 1 and 2. So if you do not want to wait till last minute to do this. That's sections 1 and 2. And again, this is the information that's specific to sections. I'm going to be talking a lot about a lot of exam information in just a minute. I'm going to get to that. But sections 3, 7, and 8. If you're any of the online sections, you'll be taking the exam on your own computer using ProctorU. You need to have a webcam and high-speed internet. Test your equipment with ProctorU before next week. You do not want to add to the stress of an exam by trying out technology on the day of exam. Because I guarantee you, if you wait till that day, it won't work. And you'll have all this stress and it'll be a terrible, miserable day. So test out ProctorU stuff before Monday. You have to, if you're taking it online, you have to start it before 4 p.m. on Wednesday, September 24th. They will not let you schedule after 4 p.m. on Wednesday, September 24th. Schedule your exam with ProctorU at least 72 hours in advance. So ProctorU, you have appointments. You have to schedule at least 72 hours in advance to avoid a fee. You are allowed a non-programmable calculator. You cannot use like a TI-86 or TI-89, one of those. Plain calculator. We also have the calculator that's in my accounting lab. You can use that one as well. You are allowed to use blank scratch paper for your exam, to write calculations on. You'll have to show ProctorU that it's blank. And as a side note, you schedule for ProctorU online. You go online, and I've gotten several emails over the weekend, people trying to schedule, saying that the exam's not there because exams 2 and 3 are there. Well, for whatever reason, unknown to me, ProctorU doesn't have the exams sorted in any kind of order. So they're not in alphabetic order. And exam 1 for our class apparently is at the very bottom of the drop-down list. So you have to scroll all the way down to find it. It is there, but you have to search for it, and they're not listed in any order. I put a request in for them. I don't understand why they can't alphabetize. But so anyways, they say they're working on alphabetizing. Okay, so that's the end of the specific information. So I just went over sections 1 and 2 and sections 3, 7, and 8. Your section on Blackboard is customized for how you take the exam. So now we're on to exam basics. First of all, the exam is timed. It's 120 minutes. The average, I design it to be taken, the average student, whoever that is, takes, historically it's been about 45 minutes. 45 minutes, 50 minutes, somewhere in that range. So I try to not make it so that you're rushing to get through it. You should have plenty of time, but of course there's a whole range of paces there. So you have 2 hours. On the exam, there are 3 to 4 exercises, and exercises are exercises from your homework. The exam is in My Accounting Lab. Okay, so you sign into My Accounting Lab for the exam. That is your exam. It will also have 22 to 28 multiple choice, constituting about 75% of the weight of your exam. For the exams, you are allowed to use 1 page of notes. Okay? Now, this is not, do not call it a cheat sheet, because we have cheat sheets and you get turned in for those. okay? This is a reference sheet or a sheet of notes. You're allowed to use 1 page of notes. The proctors know this at both locations, both ProctorU and in the lab. You may have 1 physical sheet of paper. That piece of paper can be 8.5 by 11 inches maximum. It is physically 1 piece of paper. You can write on it, you can type on it, and keep in mind I'm telling you all these things because I've gotten these questions in the past. You can use any color of ink on it. You can use highlighters on it, but it has to be 1 physical sheet of paper. You can print it. You can write it. If you tell me that your printer doesn't print both sides, I would say it does. Print 1 page. Take the page, flip it over, put it in the printer, and print page 2. You have to only use 1 page. It has to be readable to the naked eye. I had somebody this summer show up with a magnifying glass, and you cannot do that. So it has to be readable by your eyes. And then you cannot use 2 pieces of paper. Every semester we have people show up with 2 pieces of paper with writing only on 1 side. That is not equivalent. 1 sheet of paper. You cannot tape 2 pieces of paper together to make 1 page. You can't staple them. You can't say, see, I don't have anything on this side. If you bring 2 pieces of paper or more, I had someone one time do an advent calendar type thing. You know, they pasted them together and had little flaps. That's not acceptable either. I should make actually it was pretty intricate. But if you bring in 2 or more pieces of paper, 1 of 2 things is going to happen to you. If you're caught halfway through the exam, you've already worked on the exam at all, you're going to get an automatic 0. Keep in mind, no matter how you take the exam, you're being videotaped. If you're in the Proctor lab or you're online. So don't use 2 pieces of paper. If they see you before they start the exam, if they notice you have 2 pieces of paper, they'll ask you which sheet you want to use. So just use 1 piece of paper. That's an easy no-brainer, but 1 piece of paper. Okay, this is the piece of information that is not on Blackboard. If you take the exam Monday and you submit it by 9 p.m., submit it, not 9:01, but 9 p.m. You submit it by 9 p.m., you will get a 10-point bonus added to your score. Okay? It doesn't matter where you take it, if you're ProctorU or in the lab. I'm trying to encourage people to take it Monday so we don't end up with a huge mess on Wednesday. So if you take it Monday, you will get a 10-point bonus. If you take the exam, for example, on Monday and finish it before 9 p.m., like submit it, it's in, your score when you submit the exam, let's say, is 87%. On Tuesday, I will add 10 points to your score, and your score will become 97. So it's just 10 points added on to that score you get. This is a huge deal. Now, this is a one-time offer. There are no exceptions. This bonus offer is only for Monday. Okay, so let's say you're taking it with ProctorU and your internet connection goes out and you can't finish by 9 o'clock. It's done. Take it early. The best advice I can give you is take it, aim for 9 a.m. so that if something goes wrong, you have time to recover. There is no bonus if you do not take the exam on Monday and finish it by 9 p.m. for any reason. This information is not published on Blackboard. This is your reward for coming to class or watching the video later, but you will have this 10-point bonus. The next question I always hear, is there a curve on the exam? The answer is no. If you want 10 points added to your exam score, take it Monday. Okay? Now, I'm not done. I have 3. Your exam info quiz is on all this information. Okay, basic exam rules. Your cell phone cannot be visible ever. You cannot use it as a calculator. If your cell phone's visible, if it's showing in the video, or if they see it there, you get a 0. Okay? It's got to be put away. Do not leave your computer. If you're in sections 3, 7, or 8, you will have a proctor on your computer. Do not close that proctor window, absolutely positively, until you have submitted your exam. It's a good idea to ask the proctor before you close the window, saying, are we done now? Can I shut this window? If you close the proctor window and your exam's still open, that's going to give you a 0. Don't leave your computer, no other windows open during the exam. There's detailed exam information on Blackboard that you're responsible for. Now here's the other biggie. Regardless of any section you're in, if there's any issue during your exam, I give a lot of exams and there's very, very, very few issues. But if there is an issue, and I cannot anticipate what that issue would be, but if there's an issue, it is your responsibility to contact me via email right away. Even if the proctor says, I'll contact her for you. No, it is your responsibility. I have proctors at ProctorU. I have proctors in the computer lab. There's a zillion proctors, it feels like to me. I want to hear from you. If there's an issue or if you're in doubt, you need to send me an email right after your exam. I need to know about it right away. It's your responsibility. Do not rely on a proctor to contact me. It is your exam. I monitor email like a hawk during exam days, and I am watching, so I will get back to you. Don't wait till the last day to take the exam. If you don't take your exam on time, you lose out. There's no makeups. If you are registered with SAS, this is important. If you don't know what SAS is, it doesn't apply to you. But if you are registered with SAS, I am making the assumption that if you're in Section 1 or 2, you can take the exam in the proctor lab or SAS office. I don't care. If you're in Sections 3, 7, or 8, I'm assuming you're going to take the exam in the SAS office. If you choose to take it with ProctorU, you absolutely can, but I need 5 days notice so that we can get that set up. Know your My Accounting Lab login. That will get you into your exam. It's in My Accounting Lab. There is an exam info quiz. You have a maximum of 2 attempts. And there's a practice exam in My Accounting Lab. It's going to become available. Do not take it until we talk about it on Wednesday. So on Wednesday, we'll talk about the practice exam quiz. So I will see you on, and the practice exam quiz is due before you take your exam.